Okay, hello, Jim, guys, and let's start. Okay, hello everyone. I am Nora. It's very excited to host the Crypto Markets Insight session with our guest. Today, we are thrilled to have with us our guest who will be sharing their opinions on the market trends. As the host of today's discussion, I'll be leading us through a thought-provoking conversation that promises to be both informative and engaging. So, whether you are an experienced crypto user or just getting started, we encourage you to sit back, relax, and join us for what is sure to be an enlightening discussion on this week's market performance, trends, and hotspots. The live session is broadcasting on CoinW Live channel and CoinW's YouTube channel. Welcome all to watch and leave your opinions or questions about market, coin, etc. in the comment. Our guest will pick up some to answer, and I'll mention that our audience can join the CoinW community to claim the 20 USDT rewards. And please check the live details for the link. Yes, and in the first part, we would like our guest to share your market insights on any crypto tokens you want to talk about. Please be free to share the screen to let us watch your charts. So, firstly, let's welcome, Kelly Patty.
Hi, glad to see everyone in the new year and welcome to our AMA session. I'm Katy Petty. Hi, Nora. Hi, all guests. Today I'm talking about Bitcoin. Let's look on the chart. And right now the price of Bitcoin is about 90 k dollars. Is downtrend today. Look here, the price near important level. We see two important license resistance approximately at $94,400. The price has problems going lower than this. So the price is moving between 86,700 and dollars and $94,000. I think it's look like consolidation. The price is not making a big move up or down. This has been going on for a long time now. There's no driver for the market. The RSI value we can check is around 50. This in the middle area, not overbought, not oversold. It does not give a strong signal now. We can also see open the gap on the CME. What is the CME gap? The CME exchange is closed on weekends, but Bitcoin trades 24/7. If the price of Monday opens of different level than Friday's close, it's create a gap on the CME chart. And why it's important, the market often returns to fill these gaps later. They can act like a magnet for the price. And current gaps we can check here. The nearest CME gaps below us are around $88,200 and $88,700. The important support zone for watch if the price goes down. And about volume trading, Bitcoin is trading volume is normal, not very high. This is confirms the consolidation. As we can see, according to the chart analysis, we can see Bitcoin is not is in a consolidation phase after the recent drop. In the short term, the trend is slightly bearish because the price is below key moving average. Key for the next move, watch the 88,900 supports and of course 91k dollars resistance level. If price breaks below approximately 90,000, the next target semi gap zones is $88,200. If price above 91,400, it's good to try to test the 92,400 level again. And of course, the semi gaps below is important support level that could stop a drop as the market is waiting a clear direction, of course. And guys, don't forget control your risk as you can see BTC still remains high volatility. And thank you everyone for watching my analysis. Thank you. That's all.
Yeah, yeah, sure. Thanks for your analysis of the Bitcoin. Yeah, perfect. Thanks for Patty. And next one, let's invite Priya.
Okay, thanks for inviting me, Nora, and good evening, everyone. So, I wish this new year started with lots of blessings to everyone. Okay, so today market. So, as we are seeing, the market was a little bit bearish side, and yeah, a little bit after the long time we are seeing that little more positive, and actually it was turning to negative. Let's see how it looks towards it, because it's struggled to give a break on the top, like 94 point something. So on 95 it is actually struggled to give a break, but right now the support was formed at 89.5. So still the support could be stronger. Why? Because the volumes are lesser from that. When the volume is getting increased with the bullish while taking this as a support, then we might expect little more positive. So I'm just looking into the market. Yeah, so this is a short-term pullback, and after the recent rebound, and also the Bitcoin is trading below the recent highs, isn't it? So that also showing some more profit taking. So that is how I'm looking into this situation. So profit taking as, and also the cautious sentiment as well. Along with this, even not only the Bitcoin, even Ethereum and other altcoins, everything is under pressure right now. So the major move looks like healthy consolidation. Um, like this is making the new correction. That is how I can think the market right now. So the correction is in a healthier way. The structure also remains constructive. So as I'm seeing the key support levels, these are holding, and also we are closely watching the macro signals and institutional inflows for the next catalyst that will give us some more confidence for the buyers. So if the confidence improves, we could also see another attempt toward the resistance levels. If not, maybe the market may continue ranging in the short term as well. And many of you get confused whether this is the trend which we are seeing is panic sell. I don't think it is a panic sell, because this is absolutely a correction, and also we can say this is the short-term profit taking after the rebound as we have seen. And we are looking a new resistance level again. So at the same time, uncertainty around the macro factors like interest rate, global news, and also the risk sentiment is keeping the investors cautious. So this is not a panic selling. So this looks more like healthy correction and consolidation rather than the trend reversal. That's what I think about the market today. Thank you.
Yeah, yeah, okay. Thanks for your analysis. Yeah, thanks for Priya. And next one, let's invite Jay. Okay, Jay, are you here? Okay, let's invite Lee then. Yeah,
Oh,
Lee.
sorry. What
Oh,
up?
yeah. Okay.
Sorry, sorry, sorry. I was in my hand. All right, let's go. I'm gonna share my screen. Mm, okay. Switch to my screen mouse. Thank you.
Yeah, sure, sure.
No, it's not my screen yet. I need. Okay. Oh, Are you the one that doing it? Okay, cool. Thank you, Nora. So, about today's topic, we talking about the Venezuela shit, right? And this thing, it's correlated with the oil. So watch out on oil. And I did live this afternoon, around 3 something, and I've been talking about the oil because like, if something happened with the oil, all right, it could happen to the SPY and Bitcoin. And this is what happened on SPY on the intraday. And also last night we got a lower than expected from Jolts. That means we got like a neutral Dolphins, but on Jolts, only on Jolts, when we got a lower than expected uh points. So that means, oh my god, we can get a dump. So we get the dump this morning until now. And SPY same, a little bit pullback today since last night. But if you guys see it on intraday, look clear. We make like higher high, lower high, and lower low. So this thing could be lower. So if this thing could be lower, I might shorting Bitcoin too. I might shorting Bitcoin for short term, and I might targeting around 198 to short again. But I'm still bullish, guys. Don't get me wrong, I'm still bullish. But all I want is to gain 74, 81 just to fill this shit. And when this green box is filled, all right, I'm full more of bull, back to bull, because like guys, the bull market is not over for me. Not over. I kept buying spot. I still got my spot that stuck a little bit higher, but I still got it. So there's one catalyst, and this is the oil. Could be the one of the catalysts, and there is two more. Maybe like some good news from FOMC news, which is the one that we've been waiting since last year, like BP, maybe like 50% BP rate cut, maybe, I don't know. So for oil, this is negative correlative with Bitcoin. So let's say oil pumping, Bitcoin is going to dump, and so does SPY, because like SPY and Bitcoin is positive correlative, and oil is the negative correlative. So so oil. So when there is a narrative going around right now with the, let's say back then we got the Middle East, because Middle East got so much oil, and now we got Venezuela. Venezuela got a ton of oil, and when shit happen, we should look for oil. All right. So let's say if oil performing like back then, okay. Let's say this pump and this pump 24 June. So I still remember like 24 June on Bitcoin. It's pumping. Look at 24 June. 24 June, 24 June. Yep. It's moving. So but when oil start to cooling down, let's say we say dump, we can get our trend back, which is to the upside back. But until the oil is cooling off, yeah, the market is gonna be choppy, guys. Because one thing you should care, because we should really care with this Bitcoin dominance. Okay, we got Bitcoin dominance that they've been chopping. This is ranging, small ranging, and when this thing happen, it's gonna be like chop, like up fast, down fast, and the range is gonna be high. And look at this, how long we've been ranging since this drop. Okay, and we are ranging this. So if I close everything, okay, this is the range low, range high, and we are at this shit. Look at that, voila. And when this thing, when either of this break, we might get our rally or our bear market. So let's say we're going up, we got our bear market. Let's say we're going down, we got our rally. So that's simple, guys. That's simple. So if you guys like still got spot, you guys might want to pray. We're gonna break the 58.49% of Bitcoin dominance, and until then, just be patient, guys. All right, Nora, thank you.
Yeah, yeah, okay, thanks for Jay. And so last one, let's invite Lee.
Oh, okay. Thank you, Nora. So I'm going to share my screen. Could you guys see my Binance? No, maybe.
Uh, no. Yeah, we can't see screen.
I'm gonna
It's
try
all.
again. It's so weird. Give me a second. So I'm gonna open the trading view, and instead of Binance, maybe there's something wrong with my Binance app. Maybe.
Yeah, sure. It's okay.
Okay. Right now it's working.
Yeah. We can see. It's good. Nice.
Okay. Maybe something about internet issue. So this is a trading view from the price of ETH. So today we're gonna take the ETH as an example. From the macro perspective, since the end of Japan's interest rate hike incident in the currency market has a crypto market has entered a period of information vacuum in recent days. So I will check the time period as 1 hour to find the channel here. Yeah, and we find the trading volume is not that high, and at that time, and also I mentioned multiple times on my personal X that area about ETH around 2900 was a very good position for going long. So if you change the time period at 15 minutes, you can find one, two, three, four, maybe four different position to open long. So and after that, then a mineral rebound occurred due to. So here is a rebound, a recovery. I would like to say it's basically technical upward movements, and also because of the BTC perps expirations, and also it's the end of the year, so everybody's sentiment, and based on these factors, market got a recovery in an upward channel here, and now it's not. But I would like to say it's not like a bullish market. So everybody is curious what will happen next. So from a macro perspective, because the 4-year cycle has largely concluded, there are expectations of interest rate cuts next year. No significant negative news, and coupled with changes in market structure and the institutional holdings. So I would say the probability of short-term crash or plug is low. So in a short term, yeah, due to the news and the macro stimuli, such as tomorrow is Friday's NFP data or tariff issues, and also cryptocurrency regulations, and so there remains a risk of a short-term decline. And in the event of negative news, there is even a possibility of a deep pullback. So we need to set stop loss, and I would say it is not smart to open long here in downward channel, and we will change the time period in 15 minutes, and right now it is obvious here is a downward channel, so it's not that easy to open long position. So in fact, capital, actually some institute has already started to seek safe havens, and with prices already falling because the Friday's news maybe, and moreover from a technical standpoint, 32 250 is the resistance level, and roughly equivalent to BTC, maybe around 9.4. Actually, ETH, BTC, Solana, they always have the similar trend in price and the K line. So we find the same channel here, and so if I would give everybody a strategy, so my opinion is in short time, go short on realize, and with a short term target range of take back to ETH price. So I would like to say target range of 30902, maybe 31030. Additionally, if there is a negative macro news, we look down to more crash, maybe to 3020 and maybe 2970. So if there is a positive macro news and ETH holds above 3130, I would say there is a probability of going long again. So this is my basically strategy of recent market.
Yeah, yeah, sure. Thanks for your analysis of the market. Yeah, that's so nice. And guys, now I would like to share my screen. Yeah, I have some questions for our traders. Yeah, I believe you can see the questions. Wow, the question one is, after the Venezuela shock, Bitcoin led a noticeable rebound across the crypto market. First one, how do you interpret the core drivers behind this move? And next one, was it mainly driven by a safe haven narrative, or are there deeper capital flows and structural factors at play? So for these two questions, let's first invite Katy Patty.
Thank you, Nora. Thank you for your good questions. News about instability in Venezuela affect the cryptocurrency market, of course. The price Bitcoin went up for a few, maybe key reasons. First of all, of course, a safe haven idea. In countries with economics problems, people sometimes buy Bitcoin to protect their money. When there is bad news, more people around the world might buy Bitcoin for safety. Second, of course, big investors also impacts large investors and funds often buy Bitcoin when its price is low, hoping it will increase later. This buying can make the price go up. And of course, market sensitivity. The crypto market reacts quickly to major news. News from one seller may have been the trigger that started the buying. And in summary, the situation in one seller likely started the price increase. However, the main reason will large investors buying the crypto market's normal reaction to news. But perhaps we couldn't feel the impact in the future. First of all, Venezuela is rumored as a hold of bitcoins, but no one knows the exact number. And we can say for sure what the US government will do if they confiscate them, and how might it affect the future price. This is my opinion. Thank you, Nora.
Yeah, yeah, sure, very clear. Yeah, thanks for Katy Patty. And next one, let's invite Priya.
Okay, right. So about the Venezuela, and after the shock, Bitcoin's rebound wasn't driven by just one factor. What I think is the safe haven narrative did play a role as investors reacted to geopolitical uncertainty for sure. But the bigger driver was the structural capital flow. As well, the institutional buyers stepped in. Bitcoin also observed a risk more faster than the traditional markets, and also the short covering around key levels, which also amplified the move. So this was less about the panic hedging and more about how Bitcoin now functions as a liquid, globally accessible asset during the moments of stress. So the move was not solely as a safe haven event, although that narrative helped in the moment because the rebound was primarily underpinned by the structural market forces, as for the institutional capital force, the technical dynamics like short covering and broader liquidity shift. So all of which gave the market a stronger bid once uncertainty was processed. So this also suggests that Bitcoin behavior is evolving, so it still reacts to macro or geopolitical events, but the capital source and institutional participation now play a more fundamental role than the pure risk of hedging alone. So this is what I actually think about it. Thank you.
Okay, sure. Thanks for your research and analysis of this question. Yeah, that's so great. Thanks for Priya. And next one, let's hear from Jay.
Yo. Mm, the rebound after the Venezuela shock wasn't just emotional. So we saw the risk price in already. So that's why the one that I really worry is the aftermath, which is right now. Right now it's kind of some kind of the aftermath after the price in. So Bitcoin sits on top of that list, to be honest. But more importantly, the market was already positioned defensively with the leverage and had a plus and earlier and the funding and the what else the volume delta is kind of minus right now. So I don't know, guys. We might get the after effect after this. So we already got it now. We already got it now, and some coin already like crashed like 10, 15, and like I don't know, like Zach with the bad news from the worker is leaving. So I don't know, guys. It could be bad tomorrow. It could be bad. Let's see. So thank you.
Okay, sure. So Jay, I have another question for you. So do you change your trading strategy from this event?
I did. Not
Oh,
not,
yeah.
not just this event. I did change my strategy since November. No, no, since we got the crash on October, around 11 October, and the one that Trump released the statement of the tariff, yeah, and then like since then, I stopped swing trade for now, because I know after that event, the Black Swan event, we are we don't have liquidity, to be honest, and so many people quitting and less volume. So that's why like what you see now, the market is chopped and too much consolidate. So that's why like all I do is scalping and just a little bit intraday. I used to have like a 5 into 30% stop loss on swing or intraday, but right now I make it loss risky with less risky with 2 until like 3% or even like less than 1% with the scope, so that's my strategy for now. And until we can, but what I'm waiting right now is a little bit lower for Bitcoin. That's it, a little bit lower, lower than the previous low from last year. So if we can get that, I will start back to swing. I will start building position on swing and put a little bit a risk stop loss, like higher stop loss, like 5-10%. But now, because should be careful, because right now uh the market is chopped, fast up, fast down, because the ranging is so big, guys. The ranging is so big. That's why you guys need to be careful. That's it, Nora. Thank you.
Yeah, sure. Thanks for your strategy and sharing. Yeah, thanks for Jay. And let's back to this question. So let's invite Lee. Okay.
Thank you, Nora. So from my personal perspective, this recovery in Bitcoin mainly involves the following like four factors. So the first one, what I would say, maybe deeper capital flows and the structure factors. For example, the big institute J.P. Morgan Chase recently applied for a ETH ETF. So the second one may be technical upward rebound, as I said, and next one would say BTC perps expiration, and the last one maybe the profit taking effect during the year-end Christmas period and the reduction in on-chain selling pressure. So although the war incident has triggered oil price fluctuations and geopolitical tensions with Bitcoin being viewed as a digital gold safe haven asset that rapidly attracts capital inflows, leading to a short-term rebound. What's more significant is that that war is rumored to hold that country to hold like 600,000 BTC in shallow reserves, and the potential supply shock or release could drive prices higher to provide market more liquidity. Yeah, this is a point from my view. Yeah.
Oh, yeah, yeah, yeah. Thanks for your answer for this question. So, Lee, I have the same question for you. Yeah. Do you change your trading strategy?
Actually, this I would like to say maybe the same as the last year, 2025 to 2026, the same. The only thing we need to focus is about policy and macroeconomic changes. Maybe tomorrow or the Q1 in spring. We need to find if there's anything change in policy from America and the government, and even tariff issues and the regulations, and if it's like it's so we need to see the news and to determine what we do, like to invest in Bitcoin or keep in empty position maybe. Yeah.
Oh, yeah, yeah. Thanks for sharing. So, guys, let's dive into the question two. Well, do you think the BTC rebound is sustainable in the current market environment? What are the key risks retail investors should be most aware of? Yeah, I think our traders should give us some solutions or strategy. Yeah, yeah, like this. So, first one, let's invite Caddy Patty.
Thank you, Nora. It's not clear if the current Bitcoin price or bond will be stable. The market environment has some big risks. Here, the key things for small investors to know from me. First of all, instability of the Japanese yen. When a major currency like the yen loses value, it can make some investors nervous about traditional money. They might look for the other assets like Bitcoin. This can help Bitcoin's price in the short term, but it also adds more uncertainty to global market. Also, uncertainty about U.S. Federal Reserve Fed. It is still not clear when the U.S. Fed will lower interest rates. High rates make borrowing money expensive. If they stay high for the longer, it can be negative for risky assets like cryptocurrencies because investors prefer safer options, and this is a major risk also. Also, don't forget about new geopolitical problems. New conflicts anywhere in the world can create sudden fear in all markets, including crypto. This can lead to fast and big price drops, as we have seen many times before. And in summary, the rebound might not be stable. The main risk ongoing uncertainty from central banks like the US Fed, and instability in major currencies like the yen, and the possibility of new geopolitical problems. That's my opinion. Thank you.
Okay, sure, sure. Thanks for your answer for this question. Yeah, thanks for Kelly Patty. Well, next one, let's invite Priya.
Okay, so thanks for inviting me. Great question. So I think the rebound can continue, but it won't be a smoother one. Because why? Because the overall structure it still looks healthy, especially with the institutional interest supporting Bitcoin. But the market is very sensitive right now, as we have seen that analysis how the bearish was going on, but it's not um, uh, that is panic selling, as I told earlier. So for the retail investors, the biggest risk are using too much leverage. So that could be the biggest risk, I think so. So as well, chasing a fast move, many traders will do when it starts to move bullish or whatever. So the sign, it is depends upon the sign. They can start chase faster. So chasing the fastest moving candle, that could also be the because risk and also assuming every bounce means a breakout. So that I think this could be the biggest risk the traders can make. Yeah, so I think yeah, these are some more risk which I'm looking into. So the macro news and the liquidity can also change the sentiment quickly. So this is a phase where the um, patience is very important as well. The risk control, um, these are more important than trying to catch every move. So if you guys avoid such kind of activities, you might also avoid the risk. These are the biggest risk which are the current situation. For the current situation, this could be the biggest risk. So try to trade with cautious. Thank you.
Oh, yeah, yeah, sure, sure. Thanks for your suggestion. Thanks for Priya. So, next one, let's hear from Jay.
Yeah. So the rebound can be sustainable, but only conditionally. So as long as spot demand stay firm and leverage remain control, so the Bitcoin can hold this level. So the structure matters more than the headline bounce. So if the funding stay neutral and we don't see aggressive retail chasing, so the move has legs. So that's it. So if the key risks for the retail are clear, so the macro surprise more into the stronger than expected than the titan. So financial condition, like ascendant leverage rebuild and treating this rebound as a straight line rally. So Bitcoin is resilient, but it is not immune to the liquidity of shock. So that's why we can have another shock like 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 the tariff shit from the last year. So let's see. So in short, this consecutive not risk free. So that's why guys have to be disciplined, guys, and keep watching the news, especially the economic news on CNBC, guys. So that's the most important. Yeah, thank you, Nora.
Yeah, yeah, sure, sure. Thanks for your suggestion, Jay. So, last one, let's invite Lee.
Thank you, Nora. So this question, as I mentioned before, in technical analysis, so the short-term rebound in BTC has ended, and it is now entering in a downward trend. And the subsequent market movement mainly depends on macro information in the next couple of days, as we just mentioned, tariffs and the regulation and the non-farm like MFP and this kind of data will have an important impact on the price. So, moreover, the overall environment in 2026 will be complicated because it is not advisable to be overly optimistic. Online data shows that traders are remain climb, and if policies are unfavorable, political risks and escalate, and or there is a major shock in oil price, and the market is prone to deep pullback. So, if the macro environment turns favorable in the near future, there could be still a slight upward movement, but the likelihood of the bullish market remains still low. So the probability is still low. So we need to focus on what's going to happen, especially in macro news and policy in the Q1 or a couple of days. Yeah.
Yeah. Thanks for the same point. The news is very important for us. Yeah. So next one, let's dive into the question three. Beyond the Venezuela shock, micropolitical and economic events have played an increasingly important role in shaping crypto market over the past 2 years. So the first one, which non-crypto variables are you most focused on in 2026, and which micro factors do you see as the key potential triggers for market moves? Yeah. Also, two questions. First one, let's hear from Kelly Petty.
Thank you, Nora. Good question. So for 2026, I'm really watching the health of big economics and the US dollar. Recession risk everywhere. If big economics like USA, China, or Europe start to slow down a lot, it's bad news. But economic data creates fear. When investors are afraid, they sell risk things like crypto, first of all. The strength of the US dollar is a key. The dollar is the world's money, and when the dollar is very strong, it's often bad for Bitcoin. Why? Maybe because a strong dollar makes Bitcoin more expensive for people in the other countries, and they can't buy so much, and we need to watch the dollar's prices. What make the dollar strong or weak? First of all, this brings us back to the US Federal Reserve, Fed, and the interest rates. If the Fed keeps rates high, the dollar stays strong. If they cut rates, the dollar can become weaker. A weaker dollar can be a trigger for crypto to go up. Also, don't forget problems with other currencies. Look at the Japanese yen and the Chinese yuan. When people in a country to do trust their own money, they look for the other places to put it. Sometimes they choose crypto as a digital safe place. This creates new money following into the market. And the situation in Venezuela, we must keep watching events there. Two things are important. First of all, oil. Venezuela has a lot of oil. Big changes in its oil production on new situation can change the global oil price. This affects inflation and the whole global economy. And also, Bitcoin reserve. Don't forget, it's rumored that the government of Nicolas Maduro holds some Bitcoin. No one knows how much. If the news about the reserves, it could surprise the market and change the price. No, some of my screen in 2026 will show the US dollar value, news about recession in US or China, maybe Japanese, and announcements from big central banks. This since decide if investors in the world are feeling brave or afraid, and crypto market always follows the feeling. Thank you so much. Thank you, Nora. This is my opinion. That's all.
Yeah. Thanks for your research of the war, the event, and the question. Yeah, that's so great. Thanks for Kelly Patty. Well, next one. So, Priya, it's okay for you?
Yeah, sure. So beyond this Venezuela shock, so macro political and economic events have become really important for the crypto markets, as that was majorly running. So I think that's going to stay true through the 2026, because I'm just looking forward with a few non-crypto variables which I'm watching closely, because I wanted to tell you guys what need to be you have to focus every time. First thing you have to focus with the central bank policy and interest rate. That's the first and foremost I would like to check out. So the path of US rate cut or the hikes will also dictate the liquidity and the risk appetite across the market. So lower rates tend to bring more money into risk assets like Bitcoin and altcoins, even while higher for longer can tighten the markets and trigger the correction. So, monetary policy is a big driver right now. So, that's the first thing I wanted to look into. So, now that could be the non-crypto variables which I'm talking about. And the second stuff is maybe the inflation and the money supply. So, how inflation evolves and how the central banks respond with influence investor behavior. And when inflation stays elevated, traditional markets become uncertain, and also crypto often sees increased speculative interest as an alternative store of value. I hope with that. So this could be the second factor you have to look forward, and most probably next, I think it's geopolitical tension, the official policy. So because the trade wars, tariffs, sanctions and geopolitical flashpoints create the risk of episodes that also can drive the volatility. So events like men think like Supreme Court decisions or it could be the trade policy can trickle through the equities, currencies and the digital assets all at once. So I think these are the variables I wanted to look, and maybe finally you can also look at the broader market sentiment and the traditional economic data, because things like US labor reports, GDP growth, and recession signal matters. So, strong labor data may also delay rate cuts as well. Yeah, it's a cool risk market. So while weaker data can also push the Fed toward easing and usually boost the crypto as well, I think this is what you can focus and I focus in this 2026, and you can try to decide by your own. Thank you.
Yeah, sure. Perfect. Thanks for Priya. Well, next one. So, Jay? Yeah.
So which non-crypto variable are most focused in 2036? I'm more focused on global liquidity, monetary policy expectation, and the geopolitics. Because right now the world is not good, not at the best. We are fair at inflation. That's why like I really care a bit with global liquidity and monetary policy and into geopolitics at the top of the list. Uh, is the central bank direction. So the changes in rate cut expectation and the balance sheet policy and the real yields remain the strongest driven of the crypto risk appetite. So liquidity still lead the price. Remember, guys. And the second is geopolitical fragmentation, the currency stress, the capital controls, and the regional instability continue to reinforce Bitcoin role as a neutral portable assets. And finally, the macro growth signals and the weakened growth or the financial stress tend to push capital towards the alternative. So you might hedge as well strong data can temporarily pressure risk assets. And in short, crypto in 2026 will be less about narrative and more about liquidity and policy and the macro stress triggers and the liquidity. Because if you see right now everything since ETF everything's it became so related with the SPY and the news, so that's why more uh the longer crypto stays, the more it become like uh traditional market, because all the monies came from the traditional market, from the white house, from uh the institutional, because like that's how they play, guys. That's how they play. If there is no liquidity from them, I don't think crypto can pump like used to, so that's why liquidity is important. Yeah, thank you, Mel.
Yeah, sure. Thanks for your analysis, of the question. You mentioned the liquidity and so on. Yeah, thanks for Jay. So, last one, let's hear from Lee.
Thank you, Nora. So personally, I'm still positive in the next year. Actually, as we all notice, that the current market situation is different from the previous years, and with changes in institutional holdings, and the BTC is increasingly influenced by the liquidity, government, and the macro policies. So in 2026, the aspects I pay the most attention to. Basically two factors. The first one, for example, the Federal Reserve's policy shift, like a significant interest rate cut, is possible with the appointment of a new chair in May. And second one is weaken US dollar and a decline in the DXY, pushing funds into risk assets and the growth of US debt. So the main triggering factor maybe include like Q1 employment data and tax refunds injecting liquidity and policy fluctuations in an election year in Q2, global inflation rebound or the bursting of the AI bubble. These macro events even amplify volatility in the cryptocurrency market, and this is where we need to focus on and to protect our account. Yeah.
Yeah, yeah, sure, sure. Thanks for your suggestion and strategy. Yeah. So Lee, do you have any strategy in Q1 in 2026?
uh only word is to is wait. Yeah, we need to wait. We need to be patient and to see how it goes after the important meetings or regulations, and we need to focus on how institutes and this what they do, and then we follow. Yeah.
Oh, yeah, yeah, sure. Let's focus on the news. Yeah, yeah, thanks for Lee and thanks for joining us today. I bet this live stream is very important for our audience. Be sure to keep eye on CoinW and our steamed guest. Follow the Twitter account as they will continue to share valuable insights on the world of crypto. Stay safe and take care about your sport. Yeah, good luck for you guys. So I would like to thank everyone for joining us today. Yeah, that's all for today. Thank you, everyone. So, yeah, and